Hi, my name is Chris Buncic. I'm the President and CEO of Ascendant Resources. Ascendant Resources is a mining company focused on the Mochito Mine in Honduras. We acquired the mine back in December of 2016 from Nearstar through its divestiture process, and since that time we've really been focused on rehabilitating and optimizing the current operation. While we were acquiring this mine, zinc looked like it was headed lower. We actually acquired the mine when zinc was trading about 75 cents a pound, but since that time it's actually come back. So when we took over the mine, we were approximately north of $1. Now, certainly as zinc has hit 10-year highs, it's been the wind at our backs as we've been increasing our production and certainly investing in the mine. Now, going forward, I think we've got about a 3 to 5 year window here where we'll see elevated prices, but we certainly want to be prepared for the time when prices come back down. And so ultimately we need to get our costs down to be able to be a profitable operation in that $1 to $1.10 range. Since we took over the operation in January of last year, we've increased production by 67%, taking it from 38,000 tons per month up north of 67,000 tons per month. And during that time, cash flows have increased as well. So we just had our 4th consecutive month of positive EBITDA, and we just finished our first quarter of profitability. In Q3, we made approximately $800,000, about a penny a share. And so things have been going really well. We've got costs down from $112 a ton down to just above $80 per ton. A number of things that we've been working on over the course of the year certainly panned out in terms of getting those costs down. One of which is the introduction of new equipment. And so we have an 8-year-old fleet, or it was when we took it over, and certainly there were some machines that were overhauled maybe 4 times, and typically you would look to overhaul equipment after 2 lives. So some of these are quite old machines, and so we began this cycle of replacement. In July we had 2 new trucks and 2 new scoops come in. We have new equipment that we've ordered, so for the balance of the year we'll have another two trucks and 2 scoops, and ultimately that helps us to get our costs down both from a labor perspective, from a spare parts perspective. When we went to finance the acquisition last year, in August of 2016, we raised 20 million Canadian, and that was through approximately 11 institutions, and they played pro rata on a second financing we did in March of 2017, which was at 85 cents per unit. And so through both of those financings, we've ended up with about 22 institutions. So we've got a great institutional backing. 20% or just under is owned by CQS, just under 20% is owned by Vertex One out of Vancouver, and further 16% is owned by MMCap, and they've reported that, and 10% is owned by management. So Ascendant is trading at a pretty sizable discount relative to its peers. So 0.4 times NAV as compared to 0.9 times. EBITDA is like 1.9 times versus 3.9 times. So we are significantly undervalued for a producing zinc company. We are only one of 2 producing zinc companies in Canada, next to Trevali on a pure play basis. And so I'd say there's a major gap to be closed here. That will come on the back of our transition from a rehabilitation story to a free cash flow, stable operating mine. And I'll tell you what, we're nearly there. We have eyes on how we're going to accomplish that, and I expect that by the end of this year, when we're free cash flow positive, and beginning 2018, I think the market will start to recognize that, and I think it's only a matter of time until we get this re-rating that we're fairly confident we're going to receive. 2017 is really about rehabilitating and optimizing the mine. The previous owners did not put the investment into it that they should have, and so we're certainly catching up on that. 2018 is going to be about focusing on profitability. So we want to reduce our costs. We've got projects in place that we want to move forward to help do that. And also we need to be focused on our contribution margin. Again, getting the most out of every pound on the ground, getting that total NSR up. And so we're going to be harvesting the cash flow that comes from this mine as we're effectively a stable operation at this point. The exploration activity, certainly there's a huge amount of opportunity regionally as well as from underground that we want to explore. Organically, that means that if we find something that's near to the current mine, we can bring that into production potentially over the coming years. And so that's certainly what we're going to be looking at. Looking out a number of years beyond that, we want to be a mid-tier mining company with several operating assets and perhaps an advanced stage project. And in time that will come. That's certainly something on our radar. There's a huge amount of opportunity in Honduras and at El Mochito for us right now. You can find more information about Ascendant Resources on our website, www.ascendantresources.com. And while you're there, certainly have a look at the virtual tour. It'll give you a great example of the scope of the operation. It's quite a large mine. And if you have any other questions, please feel free to give us a call.